Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Many investors have been asking about what is likely to happen with the Trinidad and Tobago Stock Exchange, the markets, and their investments in local equities. Today, our team at Bourse had a look at what are the likely outcomes for the market in general. And we will talk today about the local market, which is the All TNT Index, and then the Composite Index, which includes not only locally domiciled stock, but also includes what I call the cross-listed stock. That would be stock domiciled in Jamaica, domiciled in Barbados, and otherwise, including, of course, Sagicor out of Bermuda. So let's take a look at what is the likely outcome as we go to the first graph. Where's the market? Within the market. And you would see on that first graph what is happening is that the likely outcome or our forecasts or projections and outlook is one where the market would decline some 2 to 5% overall when you look at on a weighted average basis what's happening with that. And we'll talk a little bit more about the various sectors and so on as we go along. But the next thing that I wanted to show you is what is essentially the drivers for this performance in the market. What are the drivers? As we turn to our next graph, what we see? Well, first of all, lower earnings of the companies. That is, of course, caused by higher taxation and the economic outlook in general. Investor confidence is on the wane, and this will push the market downwards. Of course, you have other factors which are positives: stock liquidity, alternative opportunities, and well as the question of dividend preservation. These are the factors that would drive the market likely in this year, 2016. Let's turn now to our next graph to speak to the question of what we see with the All TNT Index in the year 2016. Recall, as I said, we are looking at several factors: the local market, which are stock domiciled in Trinidad and Tobago, and this represents that local market. It does not consider this particular graph, the cross-listed stock that are in Trinidad and Tobago. Very interesting statistics. When we look at the various sectors, our outlook is that the manufacturing sector would be driven down. Why would the manufacturing sector be driven down? Of course, increases in the cost of raw materials that may or may not be able to be passed on to the consumer. And this is going to push the market downward. Trading, again, affected by the question of a decline in economy, as well as trading depends on the foreign exchange access. And that is a picture that is one that suggests that things are not going to necessarily get better in terms of access in 2017. So you see the index, we take a midpoint at about 3.3. And then conglomerates. Again, the two large ones, Massey and Ansa Macal, and they are also affected by the matter of currency as well as the general economic situation. So what we have looked at are projected earnings by a multiple to determine what's going to impact your valuation in the market. Some stories that look on the upside: banking, just about level pegging on the banking side, but the non-banking financial sector, which includes Sagicor and Guardian, a little bit up. And energy, there's only one stock in energy, and that is TTNGL, and we'll come to talk about that in a little while. So the green suggests some upside in the All TNT, and the red suggests that the valuations or the prices for these sectors will drift downwards. Of course, manufacturing one would include Whitco as one of the players there. So let's go now to our next graph and see what's happening in terms of the various sectors. Well, we did talk about the various sectors, and we did talk about banking and what's happening in the various key areas. Let me just say, in terms of banking, We are going to see more loans that are going bad, non-performing loans that will impact the market, lower loan growth because of the economy. But on the plus side is that the prime rate has gone up to 9.1%, while the cost of funding has remained pretty stable. And in that sense, what you can expect to see is that increase in spreads, and that will give some sort of comfort, some sort of cushion to the banking stock. And that's why we have said that the banking stock will give you some sort of benefit. And that is 40% of the overall local market of capitalization, overall value in the market of some $90 billion. And then we've talked about manufacturing, we've talked about the conglomerates. Let's talk a little bit about energy. What has been happening in energy? Well, there's only one stock there, and people have been asking whether TTNGL, which is really a holding company only for PPGPL Phoenix Gas. And just we have suggested and we have projected that the valuation will go up by about 7% or so. And the reason for it is that the basket of goods produced by PPGPL prices are going up. Just for example, in the first half of 2016, the price of a basket of its output would have been about 62%, excluding the premium that PPGPL gets over this benchmark rate, with this benchmark rate being Mont Belvieu. But in the second half, from 62 cents, that basket pricing would have been 75 cents. And as at the 13th of January, today, given the increase in energy prices, that has gone to 97 cents. So sales prices should go up, inclusive of the premium that PPGPL gets in its sales in the Caribbean and so on. And there's also the outlook for increase in volume in 2017. We have heard about Juniper, we have heard about Sircan, we've heard about the truck compression project. All of these factors are likely to lift volumes in 2017. So increased volume throughput for PPGPL, increased output of their products and services, and increased price. That's why we are talking about an uptick, including it's paying some of the highest dividends in terms of dividend yields in the overall market. So adjusting your portfolio, consider buying lower PE multiples, meaning that where there is room for upside in the price, higher dividend stock give you a better return, and those will keep their prices as we go along. Lower dividend payout ratios, lower TT economic exposure. The greater the exposure to Trinidad and Tobago of that particular stock, there are more likely issues for the downside. And look for those stocks that have higher US dollar, generate higher US dollar revenues. As you position your portfolio, those who are very, very risk averse should think about adjusting their positions out of the market. Those who have some appetite for risk, these are the stocks that you would want to look for. As you try to get better color in terms of the stock picks, give us a call at Bourse and come and see us so that we can tell you where you should position as you go forward in this very challenging year ahead for the Trinidad and Tobago stock listings. Have yourself a wonderful investment week. Look for us in the newspapers with regard to the price of our various mutual funds on the Bourse and the Save Invest rubric. Look for more detailed information on this particular presentation at bourseinvestment.com, where we rerun the Bourse CNC report. Have yourself a wonderful investment week. This is Subhash Ram Kelawan for the Bourse Report.